Traders Weekly look ahead for the week starting 23rd of September 2019. Just a bit of a high level overview, the US dollar and risk before we start off. US dollar is very mixed, strengthened against the risk assets, Aussie, Kiwi, but also weaker against the Swiss, muddled against the Euro, also weaker against the CAD, which is fairly telling, and I'll go into a bit more later. You can sort of see that there and reflected in the DXY. I sort of expect this wedge pattern to sort of maintain and provide a bit of chop until we get some resolution of that, which I sort of think will come through by Wednesday, Thursday this week with some GDP numbers to break out one side or the other. Similar for risks, or a little bit of risk off in the back end of last week. We saw some government bond 10-year yields coming off, pulling back. Ditto with equities, SPX and Aussie SPY, and obviously that flowed through very strongly into a strong yen with all pairs falling against the yen. In terms of what trades I'm looking at for this week, ones that I like particularly, probably the US dollar CAD, like this from a bit of a weak dollar perspective. Well, I sort of anticipate oil to sort of keep strengthening as well, which support it, particularly on the back of good CAD data as well, provide a bit of a tailwind. So nice structure there. We've had the breakdown, it's come back up, it's starting to roll over through here. We've had a few long wicks. Daily stochastics are sort of ready to start to drop. I'm sort of looking to probably sell this pair up around that 32.90 level. Sort of assuming I'm sort of thinking it'll get back up to that 32.90 is probably as high as it'll go. I'll look to sell there, throw a stop up above those highs at about 33.18, and try and ride that one down to around the figure there, 132, for about a 4-to-1 trade. The other one which we touched on briefly just before was the Aussie SPY, ASX 200. Daily chart's probably the easiest and most telling with this. Quite like this structure. We've had a rally up. We've had this sort of strong fade, a couple of waves down. We've had this slow grind higher, come up right back up to this original sort of breakdown level and sort of prior resistance through here. Strong rejection, daily close below the open. I'll look to sell this somewhere around that 67.50. Throw a stop. I'd actually stretch this stop because it might go up a little bit. I'd try and push that up to 68.05, get it over the figure, and then try and ride that down to about that 6,500 through here, through these sort of tails, for about a 5-to-1 sort of trade on that one. Other one is dollar yen. Fairly straightforward, this one as well. Very similar to the SPY, and it's obviously matched with the yields and equities. Breakdown, slong grind up, pulled up here to this sort of prior breakdown level, rolled over, daily stochastic starting to cut down. If we look at probably the 4-hour chart, it's probably better to see this on. I'll look to probably try and sell that around that 107.80 level, just through here, and this prior breakdown level. Put a stop up. I'll try and keep it a little bit safe. Don't do tight stops. Throw a stop around that 108.18 and look to try and ride that down to sort of through here, through this sort of cluster around that 106.70. That's about only a 2.5-to-1, but I feel that's a fairly safe play on that. With the way, particularly how that closed down at the lows, it looks quite bearish. So any rally, particularly early on in the week, up towards that 107.80, I'd be actively looking to sell. One sort of cross I don't look at all often, but Aussie Kiwi. I think the Kiwi's been sort of a bit hard done by of late. Particularly Aussie's definitely strengthened a little bit too strongly relative to it. This pair's sort of been one way up sort of since that 103 level. Sort of come through as this sort of the cluster of sort of prior supports through here, and we've had that sort of little bit of a failure there. We've had that breakdown. It has made a new high, so I do sort of expect it'll come up and possibly test that again. But am looking to get short somewhere through there, that 108.20. Put a stop up at 108.50. Keep it fairly tight because it is sort of going against the momentum. There's not really enough there to momentum-wise to justify a short yet, with the exception of the stochastics. But look to try and probably bank that somewhere around that 106.50 through these sort of touch highs and lows through there as well. I sort of see it dropping. I don't expect this through here to provide much support, but if it does pause here around this 107 level, I'll probably kill it on the spot. But I do expect that to break on the downside. The only other trade I'm looking at, which is very much like catching a knife and not for the faint of heart, is the Kiwi dollar. So this is a weekly chart. It sort of broke that prior low last week, even though its sort of sister, the Aussie, didn't. Particularly with RBNZ Tuesday. I'm probably going to try and leave an order and try and catch a spike and maybe try and get long around that 62 cent level. Put a stop at probably 61.75, 25 pips, and see where that goes. So it's very stretched in my opinion. It's just been down for the last 1, 2, 3, 4, 5, 6, 10 weeks. It's yeah, had been quite hammered. Um, so quite a risky trade, not my most convicted one by any stretch, and certainly wouldn't be doing this trade unless you had some profits from last week to play with. But if it does seem to hold this support, it could be quite a good level, particularly if it can rally back up to around this sort of weekly support through here in that 64, so 64.80. Be quite a nice gain. So keep the position size small on that one. But that's all I'm looking at for the week, and we'll come back next week and we'll see how we go and do it all again. Cheers.